So today we're going to be talking about SMT diversions. So we're going to be talking about introduction and types of SMT and combination of SMT and finding high probability SMT diversions. So SMT diversions signals potential continuation and reversals in the markets. SMT diversions are used as a confluence for the already pre-existing ideas and frameworks. So these are types of SMT diversions: symmetrical SMT diversions and non-symmetrical SMT diversions. Symmetrical market condition occurs when two correlated assets or instruments move in complete symmetry, consistently forming the same market structure and order flow. This often leads to the continuation of price movement. So we actually talked about order flows. So let me just illustrate something real quick. Sweeping lows, rejecting lows, and breaking highs. That's a bullish order flow. Same thing. Rejecting lows, breaking highs. That's for a bullish order flow. So I won't waste more time on that. So going to the second type. Non-symmetrical market condition arise when correlated assets or instruments move in a non-symmetrical market structure with highs and lows occurring in a uniform manner. This suggests non-symmetrical condition which may eventually lead to a potential reversal in the markets. So here are some illustrations. Symmetrical conditions. When DXY makes a lower low and foreign makes a higher high, this confirms the current price action and the underlying order flow is likely to actually continue. This rejecting lows and breaking highs. Rejecting highs and breaking low. The order flow is likely to continue. So here, non-symmetrical condition. When DXY makes a lower low with this move here, and foreign fails to trade higher than the previous high, there was no sweep above this high. This is SMT divergence, and this does not confirm the current price action and the underlying order flow is not likely to continue. So a reversal is likely to happen. This is your SMT divergence. The SY swept this low, but foreign did not actually take this high over here. So this is your SMT divergence. So combination for SMT. Foreign currency pairs. Euro USD and GXY, USD JPY and USD SHERF, that's your number 3, odd USD and NZD USD. Then for other combinations, if you are a crypto trader or a futures trader or a commodity trader, this is for you. So Bitcoin, you look at Ethereum. Gold, you look at the US dollar index. Gold, you also look at silver. Then ES, you look at Nasdaq. So finding high probability SMT diversions. SMT diversions occur and form on every time frame, literally every hour. However, there are both true and false SMT. if you trade every SMT divergence, you are likely to end up losing everything. That's why you use certain filters to eliminate false SMT divergence and focus on high probability SMT divergence. So here are some of the filters. Important filters to identifying high probability SMT divergence. SMT divergence formed at higher time frame key levels. SMT divergence formed at CRT low, also formed at key times, which is actually very important. SMT divergence formed at previous day high or lows, or previous week highs or lows. SMT divergence formed at key market structures. SMT divergence formed at key market profiles. So here are some illustrations. Here you can see Euro USD. GBP USD actually swept this high, and Euro USD did not actually take out this high. So this, you got your SMT divergence with GBP USD here. So let me just illustrate something real quick. So let me illustrate something real quick here. So a total soup on one asset is actually an SMT divergence on another asset. So you can actually check your chart for this. This is actually confirmed and it's real. So that's your first assignment. Go to your chart and mark out the SMT divergence on one asset and your total soup as well. And mark out this also and send to the group chat. So going lower, this is an example of a time-based SMT. Here you can see 5 a.m. EST took that high on these assets to your left, and the second did not actually take that high. So that's your SMT divergence. So moving lower, here is an example of a candle range. So this actually takes out candle range high on this, sweeping here, lower time frame total soup, higher time frame candle range, and here we didn't actually take out candle range high, and we also had a lower time frame SMT. So this is actually combining the higher time frame SMT with the lower time frame narrative. So here on this diagram, here we got our higher time frame bulky candle range. So here there was no trade below this candle range low, but here we got a sweep of this candle range low, and you can target your 50% as your first target. So this not actually sweeping this, it's not actually magic, it's just SMT divergence. So here on another illustration, here SMT is actually a candle range. So, and also this. So there was no sweep above this SMT high, candle range high, but the other asset actually swept the candle range high. And if you look closely, this candle here actually swept this previous candle high. Why this did not actually sweep it or that? Don't know. Wait, let me decrease this. This did not actually sweep this high or that. But here, we actually swept it a lot, like, and pop up above that high. So if you go to the lower time frame of this structure here, this whole move, this move here, you will actually see a lower time frame total soup, and here you won't see any of that. That's a higher time frame SMT and a lower time frame SMT confirmed. So when trading SMTs, you want to actually trade the weaker asset or the stronger asset. So which is the weaker asset? The one which actually fails to make a higher high on a bullish and on a bearish scenario. Like you can see here, this actually failed to make a higher high. So this is actually more weaker than this here. So if you want to actually profit more of SMTs, trade the weaker assets. So to actually show you this is actually more weaker here, let me show you something real quick. Here you can see here the market actually already swept this candle range low, but here swept this candle range low before consolidating and expanding lower. But here with this second third candle here, the candle range low was not actually swept, then consolidation before the second expansion lower. So that's to confirm and show you that SMT is actually real, and using it with your analysis will actually give you a proper edge in the market. So enough of that. Here are some examples. Here candle range low swept, but here candle range low was not actually swept with this move. So this is actually an SMT divergence, and this actually shows that this asset is more bullish, more strong than this asset. This is weak. I won't say this is weak. It's more strong than this asset. This is a weaker asset over here. I just illustrated here. So this asset is more strong than this asset over here. So you might actually trade this here. Remember, you focus on the stronger assets when bullish, and you focus on the weaker assets when bearish. So here, let me show you something real quick. Here, you got your SMT divergence already. And let me say this, your key level as another block. Here, you got a total. Let me just highlight this other block here. Other block, and maybe this might be your total soup into your other block. Then trade the third candle here, then target higher prices. So this is actually a good move in the market, and you can see this actually gave another to the soup entry after confirming in SMT, and you can see your lower time frame candle range here. range 1, 2, and 3. Then here, second candle sweeps liquidity, then taps on key level, then trade the third candle. So, important points. SMT divergence should only be used as a confluence for pre-existing ideas. Identify and trade SMT divergence only at key levels and key times. Avoid trading false SMT divergence in random places. SMT divergence should never be used as a predominant concept to generate ideas. The best SMT are formed at key times in the direction of the higher time frame draw on liquidity. So going into the live chart, I'll start with last week price action, then I'll move into this week price action. So this was last week price action, this was Monday and Tuesday and Wednesday and so on and so forth. So here we actually had an SMT on the 1 hour time frame. So here on the 1 hour time, let me take this back. So we won't be stuck. So here on the 1 hour time frame, so GBP/USD actually swept this low over here, and EUR/USD did not actually sweep this low. Let me just go to EUR/USD price action. So yeah, this is the low. This is the low. EUR/USD did not actually sweep this low over here, but this same low, GBP/USD swept this same low. So that actually confirms that EUR/USD is more bullish than GBP/USD. So let me say you're actually looking at DXY. So DXY, I'm coming. DXY actually swept this high over here. This was the high. DXY swept this high over here. It's actually the same high the same low with EUR/USD, but EUR/USD did not actually sweep the low. So if you're looking at DXY and EUR/USD, it's still actually good. If you're looking at GBP/USD and EUR/USD, it's still actually nice. So here we got our higher time frame SMT. So over here there was another SMT with this. This is actually a lower time frame SMT. EUR/USD did not actually take this low, but GBP/USD took that low, and that was a total soup. So I actually took this trade from this point here. I know I told you should actually be trading the stronger asset, but for me, I actually like buying low and selling high. That's just basically how I actually trade. So I bought this low from here, but moving into our current topic. So here, this is actually a high probability order block. This order block over here. let me highlight this. So this is actually a high probability order block. Why is it high probability? It actually swept a low and it actually has an SMT below it. So this is a very, very high probability order block, because the market actually coming down to sweep this low or maybe this low, it's actually kind of impossible. Let me just use that word, because we actually got two SMTs, a higher time frame SMT and a lower time frame SMT. Let me use different colors for this. A higher time frame SMT and a lower time frame SMT. So here we swept this candle range low, balancing this imbalance to your left. So candle range low swept and tapped on key level. What was our key level? Our 1 hour order block. Remember, from the 1 hour time frame, you go to the lower time frame, which is the 5-minute time frame, from the 1 hour to the 5 minutes, from the 4 hour to the 50-minute. So here, this was your total super entry here. So here, expansion, range, retracement, or you can call it or manipulation. This move downward, sweeping these lows here, was a manipulation. Then second, expansion, retracement, then expansion. That's your market profile. So here is a nice example of a higher time frame SMT and a lower time frame SMT here. So if you look to your left, what do you got there? You got your low resistance, liquidity run, and your draw on liquidity here. So going on to the second asset, which is GBP/USD. So this was our draw on liquidity in here as well. For our first target, our final draw was actually higher above this high over here, which was actually met. So here on EUR/USD, I just highlight this real quick. See the same blue here. See the same blue here. Sorry. This same low on EUR/USD. GBP/USD did not actually sweep this low. This low was not swept. But this low was not swept with this candle here. But EUR/USD actually swept this low over here. This is the same low. So this is actually another lower time frame SMT. This candle range low was swept with this move on EUR/USD before going higher. Why GBP/USD did not actually sweep this low, just went with 3 consecutive move upward. And you can see, to actually show that EUR/USD is more bullish, EUR/USD completed its draw on liquidity first before GBP/USD here. So going back, we got our SMT here, and we got a rejection block as well here. So you got a key level, and I'm coming. So after sweeping candle range low, we tapped on our key level, going from the 1 hour time frame to the lower time frame. Here we got our total soup here, and before expanding higher towards our draw on liquidity. So that's that for this price action. So let's actually just fast forward to our current week price action. This was last week's price action, last 2 weeks actually. Then before our final target was actually met here, called live on the Telegram group, and also final target here. So here was our current price action for this week. So let's go to the 4 hour time frame. Okay, here we are. Let me start with GBP/USD. So this low was actually swept by EUR/USD. This low. Let me show you the low. This low was swept by EUR/USD, but GBP/USD did not actually sweep this low here. So this is actually an SMT in price, and this actually confirms that GBP/USD is more bullish than EUR/USD. So we got an SMT in price. So if I'm bullish for the week, I will focus on GBP/USD more because it's more bullish. And here we tapped on a 4 hour order block key level in confirming our SMT here. Then here you got your range retracement or manipulation. Let me just say range retracement, then expansion higher towards these clean edges. So this was actually an SMT in last week's price action, and you can see on EUR/USD it hasn't actually completed its draw on liquidity yet. So that's to confirm and show you that GBP/USD is more bullish than EUR/USD. So this was your total soup here. Here, this was your total soup. Then going to the lower time frame, it's actually the same. So let's see if we can actually spot a lower time frame SMT. This low, okay, the same order flow. So there wasn't actually any lower time frame SMT, but we just got a higher time frame SMT. So here on this price action, I'm sure there was an SMT here somewhere for the second week of last week. Okay, yeah, this was it. So let me just give you just this example. Okay, let me say here. So here you can see the market actually expanded. Then you got your range, then your retracement before second leg of expansion higher. So if you take your daily range from this low to this high, you can see this was the equilibrium, and this order block is actually at a discount of the range. So let's just mark the body of this order block because it's below the equilibrium of price. So this will be our key level, and here this candle range was actually swept by Euro USD, but GBP USD did not actually sweep this candle range low. So you got your SMT here in price, and Euro USD, you got your key level and your total soup here. From the 4-hour key level, you go to the 50-minute time frame. Remember, time frame alignment. So this news, there was a news on the Euro USD. This news, this was 13:30. This news actually manipulated down and tapped on this key level. So the news actually acted as a catalyst and just manipulated it, but did not actually take USD lower. So here, manipulation of news before expanding higher, sweeping this low here. So that's the last total soup before our first draw on liquidity was actually met here, this high. So you can see how I'm actually incorporating everything from daily range to market profile to SMT to everything, order block, rejection block, everything I've basically taught you. They are all on the chart. You just actually need to actually train your eyes to be able to see them clearly. So you all have a nice day.